Indian markets are at all-time highs or near all-time highs, whereas rest of the world is not. And so people are wondering what's happening in India.
The Indian growth story is still strong. That's at the macro, level.
I just want to re-emphasize that you said tech aid. So this is truly the next decade of tech.
As the income or disposable income and consumption becomes more broad-based, even reasonable niches that companies can find will become large enough.
On India, he says that India has consistently disappointed both the optimist and the pessimist.
Hi, and welcome to Matrix Moments. Welcome, everyone. We've titled this one, What's Next for Matrix Over the Next Decade? Brief explanation. First, thank you to our Finance Minister, Nirmala Sitharaman. She coined this term and she uses it to talk about India's journey over the next decade. We've obviously borrowed it and, excited for the next decade. Partly, this is also to announce our Fund 4 closing this week. So it made sense to do a podcast to collect our thoughts on different threads. Let's start with you, Avi. Fund size this time round has gone from 300 million to 550 million. What's different and what stays the same with Fund 4?
Thanks, Rajinder. Great to be here. Very excited to announce the next fund. But like some of us veterans know, announcing the fund is actually a burden and a responsibility more than anything else. But we're excited to be in the market. I just want to re-emphasize that you said tech aid. So this is truly the next decade of tech, and hence the larger fund. A decade ago, we couldn't have said Techade, and 2 decades ago, obviously, we couldn't have. So if you look at digital companies in India, the traction since our last fund, if you were to look at the Fund 3 companies, would be up, what? Like if you take the top 10,
They've all grown like 4-5x.
I would have thought 100x in some cases, right? Like even Fund 2 companies, right? So just the deepening of the market, and we have discussed it in many episodes, that this is a confluence of things that have been building over a period of time and a compounding. And a credit to the government also, but the entire Jan Dhan architecture, which is now going on steroids at ONDC, UPI, all of this stuff, right? Then COVID came. So the markets have deepened. We don't measure our responsibility in terms of fund sizes. We measure our responsibility to our investors in terms of doing the best job we can for them in generating the best returns we can. So we take, and there's no perfect science to it, we take a certain sense of how much the market has deepened, and therefore what is the best way to capture those returns. Could that be 500? Yes. Could it be 550? Could it be 600, 700? Our peers are all in this range. Could it be $1 billion? I don't think so. So I think that's more the directional answer.
Vikram, what's different? What has changed for you?
Honestly, from a strategy perspective, we have found what works for us, and we want to continue doing what we're doing. And it is early stage, sticking to our knitting, working very closely with founders. It works for us, and we just want to continue doing that. Now, because the market has deepened, just staying focused on what we are doing is a large enough opportunity, and we just want to keep doing that.
So one thing that, both of you have mentioned is basically market deepening. Now, clearly, there is also this larger purpose around digital nation building and, where India is going over the next decade. How should one apply that to investing? Are we going to see new industries getting created? Is it going to be digitization? How should we play?
All of the above, right? But since I think you have said it so many times that we are willing for it to happen, can you explain where we are going in terms of digital market cap very quickly? At least
I think the
best guess.
I think the headline is, if you look at all companies in India today across digital, today probably totals maybe 120 to maybe $150 billion of market cap, private and public. That, if you look at overall, public markets, that constitutes maybe 3, maybe 4% of, India's market cap today. our internal estimate is that 3.5 trillion public market cap over the next decade, just given economic growth, that will certainly get to somewhere in the range of 7 trillion. And tech, which is today 3% or 4%, will most certainly get to closer to 15-20%. As a benchmark, China at one point actually got to 45%. Today it's probably 35%. The US is probably in the 30% range today. At peak probably was again 35%. So 15-20% actually makes a lot of sense. And that's, at 20%, that's $1.5 trillion of, market cap that's coming. So there's a lot, there's clearly a 10x opportunity just for the sector as a whole over the next decade. And so it's a version of defense.
So to layer on that, right? So I am thinking even longer term than that. I think you look at 2035, probably 10 trillion, say 20-25%. Now this DPI, the new term, which is digital public infrastructure, which brings together UPI, Jandan, Aadhaar, ONDC, OCEN, all of these things, right? This DPI is a big deal. And this, we had said way back that in Fund 3, we are investing in digitization of India. I think a lot of market cap, so therefore that 2025 number could be 30%, right? So lots of money to be made. That's the good news. Now let me put some sobering news. I was just reading maybe 2-3 days ago. Our per capita income is exactly 20 years behind China. So our per capita income today is what China was in 2003. Now, can you perfectly time it? No, but between 2003 and 2018, look what happened to China. That has started. That's the excitement. Now, to answer your question, it'll be all of the above. It'll be digitization of existing sectors, lots of B2B, all of the things we have done, but lots of innovation. For the first time, personally, I'm seeing that, and Ola, of course, is leading the way, Bhavish is leading the way, whether it's batteries, Ola Electric, but semiconductors is coming across the country, global products. So the difference versus Fund 3, if I were to say, was Fund 3 was digitization of existing GDP. And Fund 4 is plus innovation of new GDP.
I think overall there's also, in the last 15 years, there's been a lot of learnings. We did a lot of digital stuff, which is, whether it's mobility, food delivery, e-commerce, B2B, fintech. I think the next decade, to Avnish's point, there is going to be a lot of future of computing stuff, which the default answer in the last decade was, this is all happening in the Valley, and some of it is happening in China. And I think for the first time, thanks to a lot of government sort of policy changes with PLI and sort of all the stuff they are doing, I think there is a belief that if it is 20% or 30% of this talent globally is actually Indians, many of them have now returned back to India. They have the know-how. There is a government now enabling force behind it. And there is a attitude amongst people that, listen, we can build this in India. Right. So I think a lot of that is going to be one big change that will happen in the next 10 years.
For me, picking up on what Avnish said on what happened in China, we've always seen these comparisons, but for the first time, it feels a little bit more real and here and now. The amount of compounding that we can see from here on as we go from whatever 1 in 2 households, 1 in 4, 1 in 5 households, which are say middle class and above, to 1 in 2 households, which will be middle class and above. That's like probably 200 million such households. That level of scale and compounding we've just not seen. And to me, these companies which will start breaking out will become larger and larger. That's a very interesting and personally very exciting thing for me to invest behind.
Yeah, no, I agree. I think, to Rajat's point, Fund 2, which was for us, 2011, 12, in that time frame, mobile internet had just started.
Yeah.
Fund 3, we had started seeing, 4G happened around that time frame, and also the first generation of experienced founders started.
Yeah.
Today, with AI and whole large group of founders who have real experience building very large companies, some on the tech side, some on the business side, it seems like the timing for India actually seems very exciting. If we break this down and see how it plays down.
Sorry to just pause there, Rajinder. I think in terms of timing, so these are the technology trends. I do think we should keep emphasizing the macro trend, which we said earlier. But I'd give you another statistic. At $2,500 per capita, 50% of spends go to the bottom of the Maslow's hierarchy. At 5,000, that number becomes 25%. At 7,000, that number becomes 5 to 10%. We are going to see a boom across categories that we haven't seen before. That was with China, and all these technology trends just puts it on steroids. But that macro, frankly, I get excited and worried about the most.
No, I think the macro, India has been on a stronger trajectory over the last few years, and obviously it has to continue to play out. But if we break down this large technology trend line plus the macroeconomic trend line and see how it plays out by sector, maybe starting with consumer first, what are some of the themes that you all are excited by, Taran and Rajat?
So we had actually done this report, as you know, which was a DCI, Digitizing Consumers in India report. And I'll just maybe borrow themes from there, right? I think the big one, at least for me over there, was more and more women coming online, more and more people above the age of 45, 50 coming online, starting to transact. There was a time in India where we said, all the internet usage and transacting user base was largely urban, metro, tier 1, tier 2, male. Right? Today, that is far more broad-based, right? And we're starting to see that in our companies in terms of the underlying data that's growing. So there will be a bunch of themes that we will bet on over there. I think second is, traditionally, commerce has gone where attention is, right? There is a lot of attention and time being spent on social media, creator economy, influencers, we've spoken about that. I do think that there will be new e-commerce models that will be built on the back of these trends, whether it's video-led, whether it's influencer-led. And we're seeing some of those these are still early days for those companies. But I do think that eventually commerce will shift to where people are spending time and attention. Okay. Omni-channel is a big theme. Even if you see some of the larger vertical, companies which have done well today, bulk of the businesses, offline today. And I don't think that theme goes away anytime soon. There was a time where everyone was just, obsessed on it being online and internet. But eventually you have to go where the customer is. So I think we will see that, particularly in sort of media, social, gaming. AI is, I think, going to play a big role. Cost and time to create content is going to trend towards zero. That opens up a whole different set of possibilities in terms of economics of game creation, economics of content creation, just crash to zero, right? And business models which till today were not viable will suddenly start making more sense. So we will spend time on some of those as well, and we've actually made one investment and we'll continue to make a few more. I think the last one is, there are policy changes which are happening, right? Particularly in gaming. That's been a big positive in the last few months. India as a country, we've always had a lot of gamers and a lot of people spending sort of money online. But with sort of a lot of the tailwinds in terms of the regulatory changes, my sense is that sector is going to just explode now. And so I think some of those things, those are the themes that we will spend more time on.
I'll add a couple of things as, the income or disposable income and consumption becomes more broad-based. Even reasonable niches that companies can find will become large enough. And that's where we see tremendous opportunity for new consumer brands, for example, right? Where you find a consumer segment which you can serve better than incumbents. It's going to be large enough because of the demographic shift that's happening and income shifts that are happening. So that's one. Second, I think we've talked about it earlier also that premiumization will finally start happening. And we're, for example, seeing that in the auto segment, right? The number of SUVs that get sold, or in closer home, Ola Electric, right? It's just off to such a fantastic start. All of these are more premium products, but they're scaling, and this trend will just continue across categories. And very exciting times from that perspective. We'll continue to invest behind such product innovations and such even channel innovations across D2C brands, which help people target these niche audiences.
Vikram, speaking of technology trend lines, at least on software and fintech, it seems like things have just completely exploded.
Yeah. So fintech, somebody was asking me whether we are still excited and investing in fintech, or has it played out? And my answer was actually it is still very early in this fintech journey. If I look at the top 10 companies by market cap in fintech, they have flipped over where you have 50-50 between incumbents and new players globally. That's not happened in India yet, so we have a long way to go. So it's very early in that journey. And in India, by and large, financial services is still underpenetrated. And so people might be banked but are underserved. And so we are still early on that penetration journey, which means that there is a whole host of companies that are going to get created, which are going to really drive financial services to that next 10 million, and so on. And so let me bring it to life with 2-3 themes that we are super excited about. The first is, I guess, transaction finance, where there is transaction which has a distribution margin or a take rate, as well as a financing margin. And we have companies like Off Business, Auto. We've invested in a Travel Plus fintech company which does the same thing. I think this is just the beginning of that journey where it couples commerce plus fintech in different business models. The second is, especially in wealth and insurance, tech penetration is still very low. And actually, wealth and insurance penetration is also very low. So we're going to see a lot of tech first distribution models, as well as made for tech products in some of these areas. That's the second thing that we are super excited about. The third, to Avnish's point, there are all of these open protocol systems which are borrowing from UPI and are coming up. There's Oken, there's AA, there's UPI Lite, which is coming. There's credit on UPI that is coming. All of which is going to lead to an explosion of bank tech, which is tech consumed by both fintechs, banks, and by NBFCs, but also new product companies that are going to get there. So overall, continue to be excited by fintech. At least for us, it's an evergreen sector that we'll continue to invest in. SaaS, we have really built an early portfolio through Fund 3, and we're super excited about investing there. And at the macro levels, it looks like the software stack of the world is going to turn over. And in that journey, India has always played a role, but more through services. I think this time around, in that journey, India is going to play a role through SaaS and enterprise software. Whether that market share is going to be 20%, 30%, debatable, but that's going to be a very large number at the macro level. Second, the talent ecosystem is the best we've seen in that market, and it's because there's a bunch of people who have been operating in the Indo-US corridor, building SaaS enterprise products for the last 5 to 10 years. And when they are starting these companies, they're doing so with confidence, where they're building global companies from the get-go. So, which means that they are hiring teams here in the US or whichever remote location that they're working in. They have design partners in those companies. They have networks to operate in those countries, and therefore they are building much larger companies than they've ever done before. And then there is, of course, AI that is all pervasive in how those companies are developing software, how those companies are going to market, how deeply it is built into that product, not just at the interface level, but also in just how the data science is being used to deliver new insights to those customers. So that's the third trend line, which is sort of super exciting.
Listen, just sounding to all of you, the opportunity set A looks really exciting, and B, it seems very different from the opportunity set from 3-4 years ago. So maybe talk a little bit about the team and how that's also evolved, keeping in mind, how this opportunity set is evolving.
Awesome. Good. Maybe I can take that. So as we, also started investing behind the experienced founders, for example, right? Or as the talent ecosystem in general in India has increased dramatically, the quality of founders who are coming out, who are starting to build in their domain, has gone up tremendously. To keep with the times, we've also evolved as well. So we've, over the last 2-3 years, added a bunch of people who come from these marquee internet companies or marquee SaaS companies. They've founded companies before. They've come in and they're all looking to invest in their own domains. So in that way, the team structure has changed quite a bit from 4-5 years ago. And we couldn't be more excited about that.
I think it's also the expectations, right? Like as the profile of the founders that we're engaging with, as the ecosystem itself matures, I think the founders are also wanting to engage with people who can both help them get to the next level of nuance, but can also push them to think about things that maybe they haven't still thought through. And we have to keep up with the times, right? So our team, like across every sector now, we have people who have spent maybe a decade in that sector as operators and as builders, right? And I think we're already seeing sort of early results of how that translates in terms of quality of conversations, quality of conviction, the kind of opportunities that they want to pursue, the kind of founder engagement that we're seeing. And so I think it's been a conscious effort over the last year or two for us.
So this business, in my view, is moving from hunting and picking to being hunted and picked. And to put it another way, it is becoming a pull business where access to the best founders and them picking you is going to determine. And this is classic persistence of success business, right? So I do think, therefore, the team has to change to match that. Very importantly, by the way, our operating team. I think one of our something that we feel very proud of is when our founders complement Matrix, but not for the people around here or in the investment team, but for the operating team. Whether it's in recruiting, whether it's in marketing, whether it's in comp dev, like so legal, finance, right? So we do tend to roll up our sleeves a little bit more. And that team also, you guys are being involved in strengthening that, so that continues.
No, for the first time, that team is larger than our investing team. So we'll continue to build.
Only thing I'll add is from a nature of opportunity perspective, in each of those sectors, right, they're just getting deeper, and the opportunity is getting more nuanced, where only a domain expert can actually see that opportunity from that lens, right? Where whether it is SaaS, whether it is consumer, whether it is fintech, and second, in all of these cases, because there are multiple companies going after them, the GTM actually becomes very important. And we really want to be the best partners on thinking through some of that GTM, which I think horizontal folks can't do, but domain folks can.
So we've talked about the market and the environment, but maybe Rajinder, you can tell us and our audience a little bit of how the LPs in general are feeling about the Indian market.
Actually, everyone should add, but I think the headline, at least from some of the conversations that I've had, I think the positives are that the Indian growth story is still strong. That's at the macro, level. Second is digitization, and digital companies continue to grow. There continues to be enough headroom for many of these companies to keep growing. I think some LPs have started even acknowledging in that the profitability and the unit economics of many of these companies in India have actually significantly improved. And there are now multiple companies that are at scale and profitable. Not all. And of course, I think the founder quality has always been strong. I think one other thing that's changed is, I think, the Indian market took, call it a decade to get to a place where companies could go public. Now the first set of companies have gone public, and there is a belief that, there will be a cycle of IPOs to come over the next several years. I think the concerns, we've talked about it in other contexts, but there is obviously a global liquidity kind of squeeze. So how does that impact larger companies? How does that impact companies going public? And then I think specific to, our market, there have been a few blow-ups on the governance front, which I think due to, either lack of focus from founders or investors, or just an awareness of, best practices, I think companies were not at the mark they needed to be. So I think those are, clear things to improve. But at a high level, if you just think about the big picture, which is India has, if you think $5 billion plus companies, India has, on the public markets, it has about 100, 120 companies that have that kind of scale. In private markets on tech, we now have, 17, 18 companies which are at that scale. So it's not a small number, it's actually a significant number. Some of them have gone public. There are actually many more that are expected to go public. And in our own portfolio, we have companies that we expect to go public, hopefully in the next few years. So overall view is positive, optimistic. Certainly India is a bright spot relative to other markets. China has its own issues, US has its own issues, but cautious optimism.
So I would say I'd pick up from that. So from where the world is, India seems like a bright spot, but there is still skepticism. And it is a responsibility and obligation of everyone in this ecosystem to continue to deliver. And let me just double click on that. So Indian markets are at all-time highs, or near all-time highs, whereas the rest of the world is not. And so people are wondering what's happening in India. And what we say is that, hey, you know what? High interest rates and inflation were built into our model, and therefore built into the India model. and therefore growth has kept up in India. And so when you see companies declaring results, they are at or ahead of plan, and capital efficiency or economics have gotten better, right? So those are the signals that they're seeing, and you can point to those. So that makes people curious, but a lot of LPs have burned their hands repeatedly, where India has always had this promise and then something happens. So what they need to see is predictability and consistency of performance. And I would say from a venture ecosystem perspective, it's probably two things. The first is predictable, consistent exits. And we had some of that in 21, sort of hit some hiccups in 22, but still some good companies went public. And so 2023, it looks like second half again, some of these will happen, but it just needs to start happening like clockwork, right? Because then that entire full cycle starts working for the LPs. So that's one. And then the second is consistency of performance, by and large, of the scaled portfolio without, some either governance issues or something coming in the way.
I think just double clicking on that point, I think the other thing, at least, in some of the conversations, what we heard is why IPOs are important, right? While there were secondary exits that were happening, the belief that those marks were real, and the fact that, to Vikram's point, how repeatable is this, right? Eventually, public marks are real, for better or worse, and they do go up and down in different markets, but at least those are considered, much more real. And the market has shown that, while some of these companies were priced ahead and have corrected, the market is actually absorbing and sustaining multiple companies between 5 to 10 billion now in public market prices. And so I think that, in my mind, this was the biggest change in the conversation compared to sort of earlier, where the belief that, okay, now, the entire cycle, we've gone through it once, and now this is seeming more repeatable and sustainable. I think that was a big sort of point in the conversations.
I think a little bit, more pessimistic take on that, though, is that what do they see? They see listing price X, current price Y, and all of them are below listing price. What that misses is 3 years ago, none of them existed, and today they are. So it's our job to educate, and more importantly, to perform such that there are more of these. I would say, look, India has flattered to deceive many times. We all got all the top tier firms started too early in the country. In 2006, market wasn't deep enough. So 2021, we were hot, but so was everybody. The real differentiation will be when we are hot and others are not, right? I don't know. So if you look at 21, ended up 22 becoming a world war or close to it. So 22, everybody went into freeze China, run to the US, maybe where else should we look? 23 was maybe we should look at India, but now look at India's track record. Let's see. And therefore, to this point of consistent performance, I think if markets will open up eventually, hopefully end of the year, maybe early next year. I think if we deliver on IPOs and exits, you will see India breaking out late next year to 25. Then you will see the real deluge, where others are not getting it and we are getting it. So that's my hope.
So I started by calling it the Techade. I'm going to put all of you on the spot. If you had to call it 5 years out, how many public internet digital companies do you think India will have? And let's put some kind of a threshold, let's say above a 2 billion market cap or above a 3 billion market cap. Like, how many do you think there will be?
I think there'll be at least, in how many years you said? 3 years. Another 5 years. Probably 20 to 25 more. In the next 5 years. I don't know what you guys think. I think
5 years, 40 to 50 more.
Somewhere will
Say something in between, because
10. There are 5 VCs, so you'll get 8 different answers. So the question is, how many companies are there more than 2 billion of market cap in the cyber cap?
Oh, yes. I think that is closer to
300.
300.
So if you have to back our earlier statement that 20% penetration will happen, it should be about 60. No?
Yeah.
Now that is by market cap, so there's a little bit of fudging.
And so I just don't know if it happens in 5, because 5 years, it's 8 to 10 IPOs a year. That run rate sounds high to me.
No, we already have 10 companies.
Yeah.
Yeah, so
So, I was reading this.
or then the year of a deluge. You have 20 and then
Where's the market share? So I was reading this line and it's really struck with me. I think this was in Ruchi Sharma's book. And he says, on India, where he says that India has consistently disappointed, both the optimist and the pessimist. Right? And so I think there are people who are always too optimistic and they get disappointed, and then there are people who will always have the sort of bearish view, and India continues to deliver on that. And so the real answer may be somewhere in the middle. So who knows?
Now that's exciting. So you said 20 to 25 moves. That's cumulative, call it 30, 35. You said somewhere 50 to 55. I think we'll take that. We'll be happy in that, somewhere in that range, I think. And obviously setting us up well for the next 5 years after that. So, and any other updates on Fund 4 that we haven't covered?
Well, first of all, we thank our LPs. This time we've had the privilege to have had LPs over the last 15 plus years who have stuck by us. So we are very deeply grateful. This time we've actually also added a few new LPs, which is also, we have been investing, by the way. I think people in the ecosystem know this, but we've probably invested already in 20 plus companies from Fund 4. We were investing since early 22. We did end up chatting with new LPs this time, which took a little bit longer. It always does. So decided the announcement is not in line with when the investing of this fund started. But deeply grateful to all the LPs who have supported us, and welcome to the new LPs. So that's the key update.
So I think the only other thing I would add is, because it is a big initiative. So I think Bangalore, I remember 2015, Vikram and Rajinder moved here. Vikram and Rajat moved here. I think as a team, we've done a fantastic job led by both these people in terms of just building up our access, reputation, founder, relations over here in Bangalore. I think we've also come to be known as people who can sort of bring community together. We've invested a lot in that. I think it comes very naturally to us. We do want to replicate that in Delhi. We started by opening up a new office in Delhi, which is in Gurgaon. We do feel that the ecosystem is now ready. We have a strong portfolio between Off Business, Stanza, Zupi, Park Plus, and many others. But also, there's now large scaled up companies with great talent pools over there, right? So between Zomato, Urban Company, Paytm, and several others, I do think that the ecosystem is at a point where a lot of entrepreneurial activity is happening, which is what we saw, I think, in Bangalore, 5-7 years ago. We do want to be able to make that same contribution towards that community in sort of bringing it together, be part of that community, nurture that community. We've had, senior people hired and a few people moved from Bangalore to Delhi. And so that's going to be a big focus in this fund and over this cycle.
And just on this, it may be a lesser known fact. 5 years ago, if you asked people when we started Bangalore office, or 8 years ago, there was a view that everything will move here, and we are here, so we love here also. But the reality is, partly number of profitable unicorns are in Delhi, but COVID also helped, right? So people have learned how to live and work remotely. Some are still moving to Bangalore to scale, but there is now enough of a talent pool. So the reality is, Delhi NCR has 30-35% of the deal flow, and consistently over the last multiple cycles. Bangalore has 40-45%. So actually there are these two ecosystems that have developed very differently from the US, where now New York is developing. But for the longest time, it was just Silicon Valley. And I think New York is also developing post-COVID.
Yeah, and Miami.
So picking up on the thread on founder communities, in this fund, we are doing less sort of pre-seed activity in the fund, but what we've realized is, there are these founders and super nodes, and they're the first port of call for early founders starting up. And we have a founder syndicate, and there's more to come on that, and there'll be a separate announcement on that. But we are bringing founder communities together who can then invest and help founders at that very early stage. So more to come on that.
Thank you. Excited to be on this journey with you, and excited for the next decade.